The market has a red day. Is it just a breather, or is there more pain coming? This is Invest with Jacob.
Thank you, Selby. Appreciate that. So, interesting day today. We're going to look at a few things. I just posted in the main room, if you haven't had a chance to look, about Tricolor's bankruptcy, Chapter 7 at that, so they're liquidating. They're not looking to reorganize. That is a $2 billion auto lender. And of that $2 billion, 10% of that's through JP Morgan. BlackRock has bought up a ton of their loans. So just 3 months ago, they were issuing AAA prime loans, which is the highest credit, the most likely to be paid back loan you can issue. That's what they were quote unquote issuing just 3 months ago. And now 3 months later, those loans that BlackRock actually bought them up from them dollar for dollar. So if it was a $12,000 loan, BlackRock paid $12,000 and would collect the interest or whatever. Those are now worth about 12 cents on the dollar on them. The default rate has hit incredible levels, and as far as banks go, as I was reading about it, I guess auto loans are about 15% of a bank's balance sheet. So you wouldn't think that that's a huge deal. I mean, it's never good to have that much of a hit, but auto loans are about 70% of the bank's equity, and that's a big deal. So where they're getting their money and their routine payments, a lot of that comes from auto loans because there's so many of them. And so the default here that they're not going to be getting paid and that Tricolor bankrupts is just the first domino to fall, in my opinion. And I've been warning you that banks have all kinds of problems on their balance sheet, auto being one, credit card being another, commercial mortgage being the big one. And commercial mortgage loans are starting to get to points where they are in major default, and they are going to be problems for the banking sheet. So the fact that Tricolor filed bankruptcy on $2 billion worth of loans, especially who those loans are tied to, the biggest banks in the world, are a warning shot across the bank's bow, if you will. Check that out if you haven't, or Google it and read about it. There's some interesting stuff about how that all went down. Fifth Third's trying to claim it was fraud and different things, which is going to be a messy lawsuit if that's the case. That's more money and more time of no money coming in. It will be something that right now it's getting swept under the rug. You guys probably don't remember, or maybe you do. It was like, what, 4 years ago or 5 years ago, like the 7th and 12th biggest banks in the world went under. They went bankrupt and nobody cared. Market just trudged on forward and everybody acted like nothing was going on. It takes time for some of these things to play out, and for Tricolor, time is up. So these things are gonna come to the forefront eventually. Sometimes, if you I don't know if you guys have watched The Big Short. If you've watched The Big Short, Michael Burry bets his entire life on the fact that banks are giving out BS home loans, and they're wrapping up all of these garbage home loans in a prime category, and what was considered very, very safe assets were actually very dangerous. And if you watch that movie, you'll see that didn't happen overnight. Michael Burry had to hide in his office. I mean, that's probably dramatization from the movie, but it didn't happen overnight, and he was under immense pressure from his investors to get out of whatever he got into, the securities that he created. He said, I want to bet against these home loan securities that you've created. And they said, okay. And everybody took him up on it. And then they didn't fail credit, and we didn't have the housing crisis for almost another year and a half or 2 years after that. It was a fairly long time, in the sense that people had millions of dollars wrapped up in that bet he made, essentially, in that trade. ultimately he was proven to be a billionaire because of his research and his understanding of the underlying assets. And everybody called him crazy and everybody laughed at him. And then everybody said, oh. And it's ironic because I was just watching CNBC here since today was so weird and slow. And the guys were saying that we're not even, we might be in the third inning or the sixth inning, but we're certainly not in the ninth inning of this bubble. And then the other guy said, well, I mean, you know, banks usually tell us when the market's going to collapse and the banks are at all-time highs. Well, they are. But if you look under the hood, you know, it's like I said, it's like you're driving down the road with 3/4 of a tear in your serpentine belt. And when your serpentine belt tears, every dashboard light comes on, your car stops moving, and you have to stop in the middle of the road. So just remember, these things take time, but there's more and more and more evidence piling up against the economy right now. Powell is speaking right now. I don't know if any of you guys are watching that, and he just said that the Fed has a real problem because if they cut too fast, inflation goes back up and they miss on that. If they cut too slow, employment goes up and they miss on that. So they have to be exactly perfect with everything that they do, or we're going to be in stagflation. My experience with Powell is he's less than perfect. So I know where my bets and my thoughts lie, but just some information if you want to know a little bit more about, you know, economic stuff instead of just stock stuff and Elliott Wave stuff. Elliott Wave is pulling for this collapse based on structure, counts, wave patterns, everything else. But if you're an economist and you believe in the economy, you have some holes to fill there as well, and it's kind of also forecasting the same thing that Elliott Wave is. Now, again, can they chug on for another year higher? Yeah, I just highlighted that the Big Short. It was almost 2 years before it finally flipped, and then the flip was just disgusting. So markets can stay irrational longer than you can stay solvent is a hugely important quote. You know, we're playing half positions on some of these short positions that we have right now, or this longer short position because it's a weekly short. We have a half position on it, and can that change when we break certain supports and get certain setups? Yes, that can change. But right now, we're still fighting a monster bull market that won't slow down. And so we have to just understand that, keep our sizes smaller, and know when the proverbial hammer drops. And yet XLF is flat, the conspiracy starts again. I wouldn't call it a conspiracy. I just think that these things take time to play out. I will say that I think, you know, if you watch The Big Short, there's a lot of manipulation that goes on for sure, in the sense that they don't tell full truths ever. So when people are asking about bank health and people are like, it's fine, there's a huge asterisk at the end of that fine. And that asterisk is, unless you actually look. It's fine right now. Look, prices are good. Everybody's good, right? Bank health is good. Perfect. We're good. Unless you actually look at the balance sheets, unless you actually look at what's going on. And nobody does that. People look at XLF and they say, oh, XLF is green, we're flat, everything's great. We're at all-time highs or near all-time highs, everything's great with the banks. For now, yes, that is true. Everything is great with the banks for now, but the reason it's hard to short the market in any scenario is that it can do so many things to advance the market before it allows the true economic pain. So the biggest reason news doesn't matter, and we'll get into the charts, I'm sorry. The biggest reason news doesn't matter is because the market doesn't care. Right now, the market doesn't care because either they already knew or it doesn't matter yet. Inflation back in 2020, when COVID had the biggest run of all time, or COVID crashed the market, and then we had one of the biggest runs of all time into one of the worst economic and health deals of all time. That's because it didn't matter yet. All of the spending, all of the job losses, all of the companies going out of business, all of the inflation, none of that mattered yet. Then 2 years later, in 2022, they were like, hey, inflation is out of control. And they're like, yeah, it is. So let's go ahead and drop the market 20%. And that's how it works. So that's the reason news doesn't matter. COVID was the news at the time, but it didn't matter because what COVID was going to bring wasn't coming for a couple of years or more. In this case, it was a couple of years. So you have to understand that as much as we all, since we have a short position, or some of us have short positions, want to see a turn down, which we're sort of seeing today. I certainly wouldn't call this anything other than a slight drop today, unless they can accelerate into the close and break some levels. As much as we want to see that, they can still chug along here for a little longer and keep, spinning the plates, and eventually those plates are going to start to drop. So anyway, I thought that was interesting. I didn't catch that what happened. It happened about, I guess they filed on the 10th. So I did not catch it when it officially came out. But yeah, it's that was an interesting story. I usually see that stuff and it wasn't publicized. Nobody talked about it because they don't want you to know about the bad stuff. CNBC is about pushing bull narratives. They're very good at it. Okay, so here's what we had. Let me see if I can do this on a double screen, if that'll work. So we can kind of see what happened here. So it's really hard to get a trade when the S&P, that's not what I wanted. The S&P was doing this sideways the whole time, and the NQ was doing that. Now, RTY was pretty green today. It's still fairly green. It's 0.5% up. We'll go into why this is happening. But for me, this is a bubble driven by AI and the NASDAQ overall. So I always trust the NASDAQ more than I trust the ES or the SPY, because when the NASDAQ is telling you something, it's being led by the stocks that are moving the market. So in this case, NVIDIA, the biggest stock in the world, is down 2.5%, and it was down more than that earlier, I believe. And Microsoft, one of the biggest, top 3 or 4, I can't remember. I think Apple's number 2 and Microsoft is 3, something like that. At any rate, Microsoft is down a full percent. Netflix, one of the top 5 or 6 in the world, down 1%. Amazon, one of the top 5, 6 in the world, down 2.5%. This right here, just this little square, is strong enough to counter the entire ADD being over 1,000 most of the day. That's how powerful and that's how concentrated this market is. So when the NASDAQ is telling me something, that's what I listen to first. ES was not able to break out. They kind of gave us a spike. And I had mentioned that this did not fill trend day parameters up until later on. So this was not, let me get off the screen here real quick, off the double screen. So they came up and they tagged right here at the bell, second candle. They hit the overnight high. They didn't get through it. They were right at it, the exact same, double top, pulled back. And then they didn't get back through it till over here after testing. So Matt, I think, mentioned that this was a trend day setup because, or I'm sorry, that's not true. It never hit trend day parameters. That's what I was getting at. I said that wrong. Sorry, I saw that. So what happened is it did not get above the pre-market high here, pulled back. Then it got above the pre-market high, tested, and never made a new high, and then fell out. And once it falls below VWAP, the 21 and the 8, which it did right here, then I said 666 was a very likely target, which was the pre-market low. They got to that, made a lower high, and now are continuing down into the weekly average, last week's high. So this is a pretty big area here. It's last week's high. If they can start pushing through that, you get into last week's close. That should be support. You should have some support at the close. And then below that, you get into this yesterday's low, and that was the open essentially. It was also the open. Yeah, it went straight up from the open. So yesterday's low, And if they can break below that, got the 1-day min below that. So you have several other levels in here just as we look. But getting below yesterday's low would be a very strong reversal setup here, because yesterday was a pretty strong move up into all-time highs, and they are immediately selling it back down. And then if they can create a lower low day to day, not overall in the pattern, but day to day, a lower low is very important to just start, momentum to the downside. Now, I don't know that they can get down here at 662, so that's $2.50, basically 260 on the SPY. That's 26 points. Yeah, they can get there. There's no question about that. They can get their pal speaking, and he can ignite a firestorm if he says the right or wrong phrase, or they can just be ready to sell. It's just a catalyst. So they can definitely get there. Will they? Not sure, but they got to get through some pretty big levels, 664, 663, and then they get down to the low from yesterday. So that would be probably a fair amount of selling pressure if they could. So that's where they really want to get below, is yesterday's low, just to get started. That doesn't mean we're going to pull back. That doesn't mean a correction is coming. It means that we broke yesterday's low and made a lower low. It hasn't done that much. It did it a couple last week maybe, and then hasn't done it since. So we'll look at the daily chart here in a minute, but that's kind of what we're looking at on the SPY and for the day. For the ES, we've been talking about this for a while. We were looking for wave 4 to end. We do not have full confirmation of that yet, but at least it's a start. They're getting close to the, I've been looking at this 3-hour 21. They've been holding it pretty good lately. So you can see they spiked through it here on the Fed day, came back above it, immediately held, and now they're back to it. So they got decent support where they're at now. Again, that was last week's high on top of the 21 on the 3-hour. But we're looking for the top in this potentially wave 3, but at least in the wave 5 of the current move that we're targeting or talking about, the diagonal here. And then we'll have to see what kind of pullback, what kind of depth they have, what kind of information we get from market, structure, things like that on the pullback. So I do have the feeling that they could give us one more high. The market is really ugly, but this diagonal breakout here, turning down, if they get through the 21, I would expect them to come test 6,700. That's going to be major support. And if they get through that, then they got to get through this trend line. And then, of course, the Fed low is where we start to talk about a little bit of a change in character. And then again, ultimately, the August low is what we're looking at, because that's our last major low, and that's what a change of character in the market is in a bigger picture. So if you zoom out and look at the daily, you can see a lot better the major highs and lows of the market. You can see we had, we had a high and a low, and then a higher high, higher low, higher high, higher low, barely held, and now we've got a higher high. So in theory, the first main level is going to be is this the Fed low, the third? No, the Fed low is right here. The first main level is going to be the Fed low. You're going to have this low here is going to be huge support. The 6430 area we've talked about, they have held it several times. They need to get through that. And then again, breaking the August low creates a change of character, because this was your last major high. This was your last major low. They've made a new high, and if they come down and take out your major low, then you have a change of character in the market, and you should expect follow through at that point. So we'll see how that goes. Volume today is okay at best, not great, at least on the ES. On the SPY, it is not great. SPX, not great. NQ is not bad. But at any rate, we're looking for some continuation to the downside before we can start to get excited about anything other than this being, a 1/3% pullback far. Overall, you can see here. So we just talked about higher highs and higher lows on the big picture, right? So we're on the daily chart. You have your last major high, your last major low, and then you've got this new higher high, higher low pattern going. And then if you look, today has not taken out the low from yesterday. Yesterday did not take out the low from the day before, did not take out the low. The last time they took out the low was right here on the 17th. That was Fed day. You had a catalyst that allowed the market to do some crazy stuff, but ultimately closed back up where it needed to and moved on. This one did not break the low from the day before, did not break the low, did not break the low. You can see the pattern, right? They're not breaking the low from the prior day. That is a key factor in bullish moves. You always have higher lows each day. If they start breaking the lows, like they did over here, you start to see at least a little bit of a turn down. Like they did here, you see a little bit of a turn down. Like they did here, you see a little bit of a turn down. So just to get started, we got to start from somewhere. We need to break a low. So that's the first step. After that, we have the Fed low and the 21 daily are right on each other. So that 66.15 area is going to be pretty important. And then, like I said, the August low is really the first step in changing the character of the market. And then the April lows are going to be a major factor. I feel a lot of banks would be under pain that lent to undocumented immigrants. I don't know. I don't know if there's precipice that. I'm not sure. I've looked into any of that happening. If it is happening, I guess that could be a thing, but I don't know much about that. I'll be honest. Why didn't you take the buy at 12.15? Selby, you are fairly new. Is that correct? So I need you to make sure you go watch the videos on how to use the indicator. Today was a trend day down. So I explained in the video, I didn't explain the downside, but to the up, they failed to break out, which makes it not a trend day. But as soon as they break the pre-market low, which is 666, the devil number in this case, as soon as they break that, oh, what did I just put on them? Let's get that off of there. As soon as they break that, okay, they made a low right here. They back tested the 8, and then they made a lower low. And as soon as that happens, we are in a trend day down, and we ignore all buy signals. That's why we didn't take it. So there's a video on the training page, investwithjacob.com/TV-indicator, and it's about trend days and the strategy you can use. So one of the strategies, anytime they test the 21 or you get an LS, you can short. I don't use that strategy personally. Somebody else brought that up and said it was an okay strategy. I've looked at it. It is okay, is what I would say. It's an okay strategy. I don't use it because I don't think it's well enough. If you want to play like back testing, so once they break the pre-market low, anytime they back test the 21, like right here, and they start to fail again back below it, you can definitely take a short there and have this be your stop. If you're aggressive, that's a way to play that. So you get the little bounce that you're expecting and then continuation. If you guys want to play something like that, I personally just choose to follow the rules of the indicator and play it that way. It's simpler. I don't have to explain as many things. I don't have to watch as many things, and it's just easier for me. That's a me personally strategy though. So make sure you go watch those videos, Selby, so that you understand the rules of how to trade with the indicator. NASDAQ, same thing. They pushed up in the wave 5. They got near our 25,141 target. They've turned down. They have, I don't believe they've broken the low. NASDAQ's been more aggressive today, but let's double check that. No, they have not broken yesterday's low yet. So we still have higher low, higher low, higher low, higher low, higher low. And unless they do, then they got to get through this trend line. Then this Fed 21 level, just like on the ES, is going to be a huge level. It's 24,275. You got the 21 day, as well as the Fed lows. That's going to be a big support area. So even if they do break down, I would look for something like this potentially. If they get through that and they get through it directly, well, momentum brings them right into the next support area, which happens to be the 50, and coincides with the support I've drawn on the chart. You can see how many times they've been in this area. They brought it headbutt, 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 fail, headbutt through, and then they've never come back to this area again. So you kind of want to see them back into this zone, which would be 23,860. And then below that is that main area we talked about, that 23,420 area. So that is the NQ for today. Back over here, XLF slightly red, Dow Jones Transport's very green, RTY very green. So the reason I think even if they pull back here, I think based just the way it's looking, RTY looks like it wants to try to spike a high, an all-time high. And I believe IWM has made an all-time high, if I'm not mistaken. Let me just double check that. Yes. So RTY has in fact made an all-time high. They spiked it by a couple pennies here, and now they've actually pushed through it by a buck or two up toward 250 or 247. So, and they made that today. So keep that in mind as well. IWM has made it, but RTY has not. And I do think that RTY may want to go ahead and try to get up there. It's not too far out of reach from here. They are outperforming. In general, when the small caps are outperforming, that is a bad sign for the overall market. 2691 is the high roughly, and they are 2491. So they're about 200 points away. It's still 10%. I mean, it's still a solid move. They are still grinding through this area here. But overall, we are, so they have this resistance here. They came up, tested that resistance and failed very badly, and now they're back in here. But if they get back above 2555 here, 2554, I would expect them to go ahead and make this all-time high, and then I would be very nervous the market. I do think that they might do that though, so I'm not 100% sold that if they turn down, you know, here through the end of September and October, which is pretty normal seasonally, that will be the big turn down, but it should be a decent one anyway. RTY has given a bunch back today. It was up about 22, so it's given about 2/3 of its gains back. But you are seeing some bullishness, even though we have been able to break down, which tells you that the breakdown is a little stronger than the bullishness of the RTY and the Dow Jones Transports. Banks have been flat to red, and SMH is actually trying to put in a decent top here, I think. So they have a pretty good 4-5 pattern. I would love to see more volume here. That would make me happier. But if they can, at 320 here, they've spiked through it. 334 is the next. 357 overall would be the target if they continue. But they do have a pretty good 4-5 here, and with 4 being basically a triangle flat type structure, and 5 reaching into this new new highs here, and then turning down after, because they were up about $2 or $3 today. 324, 325, yeah. So they were positive about dollars and have turned over, so they were up 1% and now they're flat. So if they can follow through on that, that would be interesting. You got this gap close as well as the 21 down here at 304, so that's about a 20-point drop, or what's that, 5? Not 5, 5, about 7.5%. So if they drop down, that would be where I'd look for them to catch first. They have been kind of out of control here lately, so a little pullback minimum would be pretty good for that. NVIDIA got smoked today. They rejected 185 again. That's been a stone wall. They've been there 1, 2, 3, 4, 5, however many days this is, and then came back, tested it and failed, tested it and failed. So 185 is going to be a very, very big level for NVIDIA, where if they break through it, I would expect 200 pretty quickly. And if they break down below 164, you could expect a pretty rapid fall off down to 146. So NVIDIA has a pretty clear range that they're in. And until that range breaks, you're kind of in wait and see mode, but it's pretty easily defined right here. And right now, I would call it a bull flag, unless or until they break below this low. I wouldn't say Meta got smoked today, but it's still trying to put in that higher low, barely. So they made a low, came back up, tested the highs, To me, it does look like it wants to push to a new all-time high, one more push or two. With what's the all-time high? 796, 800, probably 820, 815 being a reasonable target for that. Microsoft getting hit pretty decent today. Again, we were looking for that. Microsoft has a great all-time high on great volume, a great reversal, came down, hit support, bounced, hit resistance, bounced. So if they the downside and break down below 492, we can see 467 really quickly. They have not back tested that breakout, so that strikes me as a very likely target. I would expect a reaction off of that point, and then if they don't react or they bounce and break through, then we're looking down here at 417 pretty quickly. So Microsoft in an interesting spot where they can give some up in a hurry. Netflix getting hit decent. Again, they put in a lower high right at the 618. They turned it down, so now we're looking for a C wave down from here. We'd be looking for them to come into this 1000 zone. That's a nice round number and good support, as well as 1067 is also the last breakout, and they have not back tested that. So 1067 area would be very good support as well. Amazon getting hit real nicely. They did not make that new all-time high. I thought they would go ahead and stretch out to that, but they've rejected so far, giving us kind of a double top. They're coming back into the support zone at 219.73. They're just above it. If they get through that, their next support is 211. If they get through that, their next support is 207. So Amazon does have decent support up here to be able to find a low and push. If they get below 207, that starts to become a little problematic for them. Tesla finally slowed down, took the smoke off the wheels. They came right up to our resistance, and they've rejected it so far. We will see if that holds and they can pull back. Remember, we were looking for this to be A, B, C for A, and then B, and then C up toward the top of this megaphone pattern that's been playing out for quite some time. Apple put the brakes on at the all-time highs and backed off of it a little bit. So all the MAG7, not all, several of the MAG7 got up near their highs and rejected. And, you know, we would look for them to, they blew through this resistance. They gapped up and through without even looking at it. So I would expect them to come back to 250 at a minimum to test that area. If they hold and push, then I would expect all-time highs incoming. If not, I'd be looking at 238 after that. And then Google, remember to stay out of the way until we see something even remotely bearish on Google. This is very hyperbolic though, and when Google does break, it could be very, very quick. I would imagine at least down to this breakout area, 207. Gap fill above that somewhere. Maybe this is the gap fill down here at 207, but there is a lot of open air for them should they fall. They're going to, you know, the 236.51 is going to be a little bit of support at the 21 for sure, but they're well away from the 21, and they don't ever get too far away without coming back. So keep that in mind. Gold, have you guys heard about gold? Gold's doing well, another 1% today, up to 347, 348. Silver doing okay, up a half, almost 0.4%. And then Bitcoin's getting interesting. They are at our support line again. This is going to be a key inflection zone. And if they cannot hold it, I would expect 100 in a hurry. 107 should provide a little bit of structure. So they can do 107 in a hurry and then bounce and then 100. But yeah, I would be looking for, something like that. Any questions on any of that? Can we look at MP and RKLB? MP, Military Police, Materials Corp. So they hit the 1618 and pulled back to the 1.0 and then just launched it after that. This is looking to me like a pretty extended wave 3. So you have kind of a ugly wave 1, which is why you get a sell all the way down to the origination point. And then you have 1, 2, 3, in my opinion, and then 4, and you're looking at 5 after that. Any break of this low would be very dangerous, 61.51. Other than that, I would expect them to extend in 5 to about 90 to 100 to the upside. So your key level is going to be the 61 area, the low that they made on whatever, the 5th of September, right around there. And to the upside, you're looking at 90 to 100 for the next target. I can fib that just to kind of double check what we're looking at, but 97 to 105, so I was a little off. 97 to 105. 88's an okay target. The 382 is okay, but the 0.5 to 618 is typical. So 97 to 105 would be your full targets there. We assume this is a 1-2, then they've hit the 1, 2, 3, 6, come back to the 7, 6, 4 perfectly. Ugly, choppy move here, but they did get close to the 1, 3, 8, 2. You'd expect them to get to 65 this move up, but it is a little ugly. I don't love it. But you would expect them to hit 63, 65, 50, 63, 53 on this move up. That would be your expected target. And then you would expect another pullback. So you'd expect something like this to 75 overall. Again, I don't love the move off of 764, but it's following the impulsive wave patterns okay as far as the targets go. But anytime I get ugly overlapping waves, it makes me a little nervous. So I would be a little nervous about them fulfilling the full 75 here, but you certainly do have a potential for that. Anything below 38, 35 is a very big problem. Likely sell on down to 13, in my opinion. Do you have a new high for gold? You were looking before taking some EKWX 401k money out. You know, at this point right now, I am having a hard time taking money out when it's just ripping. So if I see a day of red, then I'll probably do something, but it is getting in, you know, a little bit of a danger zone, and it is possible that this is a 4 or 5 finishing move, like Mortal Kombat style. And you don't want a finishing move because that leads to, you know, a fatality. So if we get a red day, I mean, could they drop it 20 points in a day? Yeah, I guess they could. That would be pretty dang crazy. But if they dropped it 1% from here, I mean, that's about what, 3 or 4 points, 3.5 points. That would still be fine. But I need to see at least some weakness. Maybe if today flips and they go back to flat or red on the day, I'll take some out there. But just a hard time to look at the chart and say it's time to take some off. In the sense that there's been no showing of reversal. That doesn't mean it can't happen out of nowhere. It doesn't mean you don't always get a reversal pattern. Sometimes you just get a reversal. And it's one of those ones, a little bit like Google, that can certainly fall off a cliff if it gets rolling. But I think that it's more likely you get a red day, like maybe a 0.5%, 1%, even 2% down day. That still leaves us at 340 if it's 2% down. And then you can go ahead and say, I'll take some profit here. So I'm willing to give up a red day before I move money on that, if that makes sense. Because remember, on EKWX, if we scroll down, we are now at 122. You know, we got in at 49. So 49 and 49 is basically 100. It's 98. and then you got another 24 points on top of that, so 160%. I mean, I'm okay to give up a couple percent on that to keep riding it out. I want to look at that candle though, because it's got a red color on the daily, so I want to see what it looks like. Today may be something we'll look at. This hanging man up here off this gap, if it stays, would be a little bit interesting. So I'll keep an eye on it. If they push it toward the close, I may trim, but if not, if they stay like this, that's a little cautionary to me. So I may have to play that one by ear today and just kind of see how it feels. Oh, wow. Did I miss something? Wow, there we go. Look at you guys breaking some levels. Woo, how come nobody posted that? Okay, so we accelerated there. I don't know, Powell's done talking, so they decided they could sell. They came down to the high volume level. They came down to this week's low, yesterday's open. That's a big deal. Essentially, they closed the no, not close the gap. Let's see what we're looking at. We're looking at breaking yesterday's low. Let's go back to the daily real quick. We are close to breaking yesterday's low, which is a very good sign. That is very strong from the ES. Come on, don't fail me now. I'm just in the wrong place. This is September, and I am no, I'm not too low. Why am I not seeing the chart? Oh, I was too far over. There it is. That is an impressive move right there. So we have a new low of the week. They did break yesterday's low. So granted, it's only just under 0.75%, but the fact that they made a lower low is very, very important. You got an 8 right here, by the way, at 661. That's also coinciding with the one-day min. So I would say getting down here is a important place. So if you are short for whatever reason, now's probably a good time to start trimming some. But that is a good development for the Bears. Nice job. Finally, some follow through, a little bit of love, you know. Awesome. So I would say that given we have the one-day max here, let me look at these levels again real quick. Sorry, guys. We need to go back to the 5. Yeah, I would say that the rest of the day you're probably going to look for something that drifts down into this 661.11 area. Remember, that's the 8 on the daily, which is a momentum indicator. So getting below that is important to start turning momentum in the opposite direction. If they get down there sooner than later, then you could see kind of something like this possibly. Just going to depend on how much follow through the Bears have. They can definitely push through the one-day min. I kind of, if they do, would expect maybe something like this to close. They come down and hit this 659 area, 659.60 area. If they do that, that would not be shocking. But the downside's getting close to the one-day min, put support. There's a lot of support in this zone. The 8's down here. So if the Bears are for real and they plow through, amazing. If not, we'll see. We'll see how it goes. But that's at least something. Man, we're waiting a long time for the Bears to actually show up and make a low. Now, can they hold it? And can they close the candle? And can they follow through? Those are all the questions we have to ask. All right, guys. We'll be back for the close. Oh, tomorrow, don't forget I'm live. It's a Wednesday, so we do our live call in the morning on YouTube. Trade live with everybody and go from there. No trades today. That was weird. We don't have that very often. We've had it twice in the last 2 weeks. So just an odd couple of days with these straight up, straight down moves with no love. All right, let's keep an eye on this, and we'll have a great day. And I'll be for the close. Thanks, everybody.
Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it'll take you right over to our website. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial. That's because I want you to get in there. I want you to make sure you love it and become part of the trading team before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking us out. We also have our educational material. If you scroll down a little further on the page, you're going to see our indicators, which you saw in the first part of the video, and also our courses. We have our Trade Waves Academy course, and right now I am giving 50% off of this course if you get the yearly indicator. So if you buy the yearly indicator right now, you're getting 2 months for free on that, and then you get Trade Waves Academy 50% off. In Trade Waves Academy, we go over all of the things that are outside of Elliott Wave to put a complete package together. We go over market psychology, capital management. You can see all the modules here on the screen. Options trading basics, candlestick patterns, how to trade price action, bull and bear traps, how to identify market reversals, fib levels and why they're important, how to identify key support and resistance, and trade setups and proper risk reward. All of this comes inside of Trade Waves Academy. On top of that, you get our Elliott Wave 4 Beginners course included in this price, and you get the Advanced Elliott Wave for free included in this price. So for $497, you get all of those modules I just said, plus the Beginners course, plus Advanced Elliott Wave. It's an incredible deal, and you can get it for half off right now if you get the yearly indicator. Now, as I did mention, we do have our Advanced and our Beginners Elliott Wave courses. In our Advanced course, we're going through a lot of the things we're seeing on the charts right now. A lot of those things are the advanced fib levels, the diagonals, double and triple threes, flats, triangles, trading Elliott Wave, which right there, that is worth the price of admission. People don't understand that there's 2 paths and how do you trade them if there's up and down. It's because you trade setups, and there are very good setups in Elliott Wave theory. You have to know how to spot them and trade them, and we talk about that here so that you can understand how to do this course. Now, I understand if this is too advanced. You can see, though, that our traders love it. But if you need to get started at the beginning, we have our Elliott Wave 4 Beginners online course. And this course is really helping traders understand a complex market in a way that makes sense. It's extremely confusing when good news makes the market go down, bad news makes the market go up. It stops at random places. You don't know what's going on. That's because the news cycles were garbage. Elliott knew this long ago. He knew that key levels mattered. It's not random, and it's you're able to find these key levels, and this is what gives you a huge advantage over the rest of the market. In this course, you get 25 videos where we go through your introduction. We have to introduce you to Elliott Wave theory. We have to get your mindset right and give you the KISS method, how this works and why it works. It's very scientific based. People think it's just, oh, you just make a wave up. No, very scientific based. It's outstanding. Chart setup and tools. We go through all of your chart setups, every tool you need to use with Elliott Wave, how to use it and why we use it, and then the Elliott Wave 4 Beginners area where we go through each of the waves, how to find the key levels, how to understand impulsive and corrective waves, how to know where to get these measurements, the corrective depth theory, the theory of alternation, the pivot, everything you need to make sense of an irrational market. Now, the really cool thing about both of these courses is there's several ways to get them cheap or for free. You can get them both at a $37 discount with our Elliott Wave course bundle. You can get them for free in our Trade Waves Academy course. If you buy that, they are included in that course. Or if you just want to get them at a low monthly cost, you simply get one of our monthly rooms, as the Elliott Wave courses are included in this price. In our first room, the Invest with Jacob room, we give you all of your real-time market updates, all of your buy and sell alerts, all of your Elliott Wave questions are answered. The midday video that you watch in these calls, that's live for everybody in these rooms. And then you get the beginners and the advanced course included in this price. We trade the SPY and the QQQ, and we swing and day trade. So we do trade quite often in my room. Now, if you're looking for futures trading, individual stocks, income trading, and advanced trading, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as the individual stocks, the futures trading, his income trading method that just kills it, and his reduced risk binary method that gets you in at a cheap price, Get you huge multiples on your money, and it's how he structures that trade that's so unique. That's why you get a 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. Thank you for watching. We'll be back tomorrow with your next market update.